In this video, I'm going to be going over how I trade. It's pretty basic, but let's see. I'll clear my charts. So I usually trade on the 5-minute, and the indicators I use is the moving average, and then I use 2 exponential moving averages. So in total we're using 3 moving averages. So the simple moving average will have a length of 200, and then the 1 exponential moving average will be 7. Let's change the color. Yellow. Let's see. Maybe that one. Okay. And then the last one will be 20. Let's see what color we should change it to. Guess that one's okay. Alright, so when you have your 3 moving average, I go on the 5-minute chart, and pretty much my strategy is once this 200 length moving average line crosses the market, or crosses these 2 exponential moving average, you would go for a sell. So when the 200 period moving average is above the market, then that indicates a sell. But the other moving averages have to also cross. So for example, this one will be going this way, and then when these 2 moving averages cross, then you would wait for a retest, or you can just enter. And then usually I just put my stop loss I usually put my stop loss at the previous low, so right here. So I'd enter here, and my stop loss would be right around here. For example, you have to be careful though, sometimes it doesn't always work. Like every other strategy, it's not going to always work. For example, the lines did cross over here, but if you'd entered and you would put your stop loss up here, you would have ended up losing. But even though you lost this trade, you could have entered this one because the lines also crossed here. So you would enter here, put your stop loss right down here, and this one went deep into profits. So yeah, that's pretty much what my strategy is. I think it's just super simple. It takes the headache out of like making lines and all that. You do have to know a little bit about like market structure, but the strategy can be used by beginners to advanced traders. For example, I usually wait for like a few bounces. Like for example, this one crossed, but it dropped way down here before trending back up. So sometimes it pays to be patient. You have to wait for the perfect setup. For example, this one was a perfect setup, and it executed perfectly. Another example would be here. You would enter or be patient until you know for sure it's going down. But if you're impatient, you could have entered a sell here, put your stop loss over here. As you can see, the market got really close, so you might have gotten stopped out. It would have been more wise to wait for the market to be trending down, but it's also like sometimes I'm impatient too. I just enter it, but what I make sure to do is I set a stop loss, so then I don't have to keep watching the market all the time. So if I see a setup here, I would enter a buy and then put my stop loss below here to give the market room to breathe, and then I would put my phone away and check it every now and then. And if I check it and the trade isn't there anymore, meaning like it hit my stop loss, then I don't really have that much to worry about, because I know how much I was risking for that trade, instead of not setting a stop loss and pretty much letting your money, like when you don't set a stop loss, like, and the market goes against you, it could keep dropping and eat up your whole account or blow up your account. So step one is to find these crosses, and the market is trading below the 200 length moving average, and when these two exponential moving averages cross from above, that indicates the market is in a sell, and vice versa. Like here, the 200 period moving average crossed the market, now it's below the market. Now you know the market is trending up. The moving average crossed from above and it's trending above the market, so that means the market is going down. When it's trending above, market is going down. When it's trending below, market is going up. Doesn't work 100% of the time, but it works enough to stay in profits. And the second step that I do is, once I see these have crossed, I would enter a sell and have my stop loss at the previous low of the market. See, it dipped here. This is a new low. This is where it would have crossed, so you want your stop loss to be at the previous low. As you can see, it got really close here, but never really, it didn't hit, so you would have been in deep profits, or you would have still been in profits. But that's the hard thing with trading, also holding your position. That's what I've been learning recently, just to hold my position. If it let your winnings, like I'm letting my winning trades run instead of panicking and instead of panicking and just exiting the trade. Because imagine if you entered here, set your stop loss here, and this took, ooh, that took a while. Yeah, pretty much, yeah, that took 2 days. But imagine holding even from here to here. It's a few hours, well, not a few, that's a lot of hours, but beauty of it is you're in more profits. You've got to learn to hold. Well, that's what I'm trying to learn, because some of these moves are huge, and if you catch them, they'll be life-changing. For example, this one. I remember I entered, so the lines crossed here. I entered a sell, it dropped, and then I exited my trade. And then this next opportunity, I missed it because I was sleeping. But as you can see, you can enter multiple trades. Well, not multiple, I mean like there's gonna be lots of opportunities. You just have to take most of them. For me, whenever it crosses, I take a trade within that direction. So when it crosses from above, I'm going in for a sell. When it crosses, so for example, if I enter this trade and set my stop loss right here, and the market ended up coming here and hitting my stop loss, I would enter again, but I would place a buy because, like I said from before, the lines have crossed and it's trending up. But yeah, that's pretty much what I wanted to cover in this video. Maybe my next video I'm gonna open up like a $100 account and trade that live and see where that goes. But until next time, peace out.